Hello folks, and welcome to my first Periscope video as a freelance journalist. My name's Kevin Reid. It's great to have you on board. You may have recognised me from some of the Accountancy Periscope broadcasts over the last couple of years or so, but I no longer work for Accountancy Age, so I thought I'd just get on with doing the videos myself. So today I'm going to cover a few of the big issues affecting the accountancy profession. One is kind of pretty obvious, and that's making tax digital. I'm also going to talk a little bit about the ramifications of the lending scandal that's ended up with several people in jail around Lloyds and HBOS, and some of the impact that may have on KPMG, and we'll cover that off. And I think that's probably a really good place to start. So this week, Lloyds has apologised on behalf of themselves and their previous acquisition, HBOS, over a several £100 million fraud case. And basically what was happening, it's kind of absolutely outrageous situation. HBOS's impaired assets division, under the remit of Lyndon Scalfield, would drag often healthy companies into its division, and he would then appoint David Mills and Michael Bancroft from turnaround consultancy Quayside Corporate Services to help those businesses. What would actually happen in reality is that HBOS would lend those companies more money off of the advice from David Mills and Michael Bancroft. That money would then be siphoned out of those companies by Quayside itself. The companies would collapse, and then whatever assets were left would then be sold on, and often to companies that were linked to Mills or Bancroft. And Scalfield himself had previously pleaded guilty to bribery, fraud and money laundering. Mills and Bancroft were found guilty this week in the courts. Now, it's absolutely shocking stuff, and raises absolutely fundamental questions, questions that have, I think, been broached on many occasions following the financial crisis around where were the controls. What happened when these issues and concerns from the companies that were going through the mill, when they were being flagged up to Lloyds and HBOS and the regulators? It would appear that there was little going on, or at least none of it was being placed in the public domain, and clearly not enough. What was going on with the governance? For KPMG's part, the interesting thing is that Thames Valley Police, which basically undertook a £7 million investigation into these goings-on under the moniker of Operation Hornet, their police and crime commissioner has called on the various parties that were involved to help repay some of these £7 million that Thames Valley Police spent on the investigation. Auditors, HBOS auditors, KPMG, were named among other parties. Now, I spoke to KPMG this morning about their views on all this, and KPMG issued me a statement. I'll run through some of their main points without trying to read the whole thing out to you. But basically they said that obviously they weren't effectively part of the criminal trial itself, and that they supplied the authorities anything that was required of them during that investigative process, and pointed out, as with many high-profile cases of fraud, the Financial Reporting Council, the accountants regulator, will consider the role of the firm, the audit firm within that process. However, the firm does want to point out that in case of fraudulent activity, they're often below the radar of a standard audit. Now, there were hundreds of millions of pounds of HBOS's money which basically was frittered away and taken out of the bank, but as far as KPMG were concerned, they're pointing out that in their grand scheme of things, that just doesn't come near the materiality threshold in terms of things that they may have spotted in terms of their undertaking of an audit. As far as client confidentiality is concerned, obviously, excuse me, KPMG can't go into loads of detail, but that they have pointed out that the FRC has actually already looked at some of the case files from this period and already approved loss provisioning work, but they are still cooperating with the FRC's inquiries. Well, I think it's fair to point out, we say, well, KPMG could well be going through the mill on this one, but if you look back at look, you just need to Google Thames Valley Police and KPMG, and you'll see that KPMG won a supposedly £16 million piece of IT work with the Surrey, Sussex and Thames Valley police forces. So, you know, we're talking about a couple of million quid here, which may be at stake if some restitution is required from them. It's, you know, again, a drop in the ocean for them. They've carried on working with Thames Valley Police and making even more money. So I'm sure, you know, they're not losing too much sleep over that. But obviously, you know, KPMG is still being investigated in a broader sense by the FRC over its various, over its role effectively as HBOS's auditor, leading up to, you know, its sale to Lloyds and various discoveries of the parlous condition of its finances. So I don't think it's the last time that we'll hear the term KPMG and HBOS in the same breath. I think also a hat tip to Ian Fraser, and a journalist, and some of the parties that were turned over by the in the lending scandal, who really chased hard on this one over several years. It was not an easy process, and of course Thames Valley Police for getting this into court and succeeding in their convictions. So well done on that front. Good stuff. Okay, moving on. Let's cover a bit of making tax digital. Our favourite topic, hey folks. I think it's kind of hard to keep up with where we are on MTD. You know, it's kind of like we waited all the way through autumn and post Christmas for an update on the government on where they stood on MTD, and basically it's been like buses ever since. You know, we've had loads of updates on that on kind of like a 2 or 3 week times a week basis. But basically the position we're at is that the government announced it was pushing ahead. We were effectively a soft launch, sticking to its dates, but being easy on the penalties. There were some other caveats as well where they rode back, but basically not really very much. And Andrew Tyree, who's a MP and chair of the Treasury Select Committee, has called on the Financial Secretary to the Treasury, Jane Ellison, and FSB, Federation of Small Business Chairman Mike Cherry, to kind of explain their costs. There's a massive difference in where the Treasury thinks it's going to cost small businesses, something like £200 or £300 per head, whereas the FSB is pointing towards a couple of thousand quid, and pushing towards £3,000 per small business for transitioning to the quarterly reporting regime. Now, the other thing that's happened this week is that Lord Billamoria, whose name will be familiar to you, a very well respected accountant, a founder and party to Cobra Beer's success over the years, has said that the £10,000 threshold that's been set in terms of whether you come into the MTD remit is an absolutely ridiculous figure. And as he rightly points out, it's a number that doesn't match any of the various individual or limited company thresholds. And it's hard to disagree with that. You know, it's a number that seems to have been picked out of the air. Moving on, I did send a couple of tweets and notes out in the week asking my dear accounting friends whether they had any questions for me. And the lovely Elaine Clark over at Cheap Accounting hit me with a bit of a doozy. Bless her. She said, basically asked me, what will the sole practitioner market look like in January 18 as they're going kind of full tilt towards managing the quarterly reporting process for their clients. It made my brain hurt yesterday, quite frankly. Now I see a spectrum of situations for the sole prac and the very small practices. I think at the most negative end, sole practitioners would have had such a painful time dealing with the situation, which, you know, comes off the back of other things such as RTI and also enrolment, that with the complexity of dealing with that process, margins being eroded even further, I think there will be another tranche of sole practitioners that exit the marketplace, basically MTD being the final straw. I think you'll then have a group for whom it's an almighty pain, but they kind of carry on regardless. Perhaps they won't do a hell of a lot in putting too many automated processing to deal with that. Maybe something very simple, but I would imagine they're probably likely to carry on, but again with eroded resources, whether it's in terms of their margins or just having to put more work in place and work longer hours. I think there's then a middle group, probably be the largest group actually, that will be out there proactive but actually looking for like a magic pill, a solution to making tax digital. They will be looking for a way to outsource that problem and try and kind of get off of their day-to-day running of their firm. That might be sensible, and again, for many of the small clients, they won't need much more than just a prompt to give the very basic information over on a quarterly basis. Then again, if you've got hundreds and hundreds of clients and you're timesing the amount of times you deal with them or communicate them by 4, that's a kind of massive ask, isn't it, really? I think then in the more positive, the kind of first positive group, there will be those that really look at their client base carefully and think, are there some of these small clients that by going down the MTD process and working with them more closely, they may be able to glean more value out of them. They'll look at them more closely, understand them better, and think, well, you know what, there may be other services I can provide them. Maybe building up a conversation with them will be a positive process. I think then there's another group of sole practitioners. We've got some that are setting up solely to provide these services on a commoditized basis. If you look at the likes of TaxGo, which has just set up within the last couple of weeks, which is a joint venture between Carl Reeder and some other accountants. The only issue with offering the cheap and cheerful service is that it is commoditized, and there then tends to be a race to the bottom. Of course, Carl, I'm sure, who I haven't chatted to this week, but I'm sure he'd argue that the value that he would gain out of that is that because he still operates within D&T, or Dennis and Turnbull as it's sometimes known, his other practice, his general practice, that he'll be able to bring clients through on the TaxGo service, and some of those may be appropriate to offer more services through D&T or the other practices that are involved. So I'm sure Carl has a plan on that front, and maybe I'll try and get Carl in front of one of these, in front of the old Periscope video, and ask him direct, face to face. We'll see what he has to say about that. Right, okay, I'd like to say thank you to Shakespeare's Globe here in really cold and wet Moorgate for supplying me with some cold and wet lager, some London lager here in the meantime. And thank you very much for watching today's broadcast. I will upload them onto YouTube, so you can catch up with them there. And cheers. Have a warm and dry weekend. Easier said than done. A bit like making tax digital. Speak to you soon.